Hello and welcome everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It is Monday, February 8th, 2021, and I'm pre-recording this Trading Places Live for Tuesday, February 9th. Futures are slightly lower this evening after another solid day on Monday. We'll get into that in just a couple of minutes. First, let's walk through the agenda for today. We've got daily market recap. I always like to start with that. Talking technically, I want to go through a couple of the major indices, also look at small caps relative to the S&P 500. Those are looking pretty good. Then we'll jump into all-star stocks, a new segment. Just want to feature some companies that have reported really stellar results of late. And these are stocks that could find their way into our portfolios. We adjust our portfolios every 90 days, and these are some stocks that have produced some great results. So we'll take a look at some of those. Then we're going to jump into relative strength. Earnings spotlight, a few companies reporting after the bell that we'll talk about, and then we'll wrap up the show with 3 you must see. First, before we get into any of that, I will take you over to earningsbeats.com. You can see here on the left-hand side an area to subscribe to our free Earnings Beats Digest newsletter. This comes out Mondays, Wednesdays, and Fridays, normally before the market is open. You can see here just a spot to put in your name, email address, hit that subscribe button. There's no credit card required. It is completely free, and you may unsubscribe at any time. Over here on the right-hand side, you can see performance of our portfolios. These are done for educational purposes for our members, just to show how leading stocks and leading industry groups perform over long periods of time. You can see with the stock portfolio performance up here, our model portfolio, which was the first one that was launched, is now up almost 250% since its inception on November 19th, 2018. So that's just a little over 2 years, maybe about 2 years and 2 months. Actually, almost 2 years and 3 months. We're getting close to that ninth quarter ending. But still, those kinds of results pretty remarkable, especially when you consider the S&P over the same period up 45.5%. I also want to announce that our strong AD portfolio has now doubled. We went through the 100% mark. This was just started May 19th of 2020. So this has only been, this is less than 9 months. We're only in our third quarter, and already it is doubled relative to the S&P 500. You can see more than tripling the S&P 500. So really good results there. Also, for those of you that have been asking, we've had a number of requests asking about our model portfolio, model ETF portfolio, and how that's been doing. We just started that on October 19th, 2020. So we're into, well, we're almost through our 4th month, and we're already up 23.53% versus the S&P 500's 14.26%. So not only doing a good job with those stock portfolios, but also picking some pretty good ETFs as well. If you'd like to check all that out, you can do so by joining with this green button here. There's it's a no-cost trial. You'll be charged $7, but then you'll be refunded the $7 within a week or so. So you get 30 days essentially at no cost to check out the service. We'd love to have you. All right, moving on, daily market recap. It was another strong day. Dow Jones up 237 points. S&P 500 up 29, NASDAQ up 131, mid caps up 40 or 1.6%. Really strong day, but look at those small caps up 2.75% today. That's more than 2 percentage points above the S&P 500. So really strong action there. I'll talk about that some more in just a couple of minutes. Energy, the leader for sure on Monday, rallying more than 4%. Crude oil now up over $58 a barrel. Which is the highest we've seen in over a year now. Anytime you've got crude oil prices moving up, that's generally a pretty good sign about global economic growth. The market is anticipating more global economic growth. That's one of the reasons why we're seeing crude oil prices rise like that. Financials also had a strong day. Early in the session, we saw the 10-year Treasury yield trying to break out above that earlier high. That was about 1.18%. I think we went over 1.19%. Early in the session, then pulled back. Financials, though, certainly benefited from that, moving up a little bit more than 1.25%. Technology also nice today, up more than 1% as that area of the market continues to lead. Renewable energy, we had pulled back a little bit, close to that 20-day moving average. Well, we are starting to roll again. Renewable energy up more than 6% on Monday. Airlines, haven't really talked too much, haven't said much about airlines and strength in the same breath very often, but on Monday, that's exactly what we saw. Airlines rising almost 5%, 4.65%, really strong day, breaking out above the highs that we saw in December. Still a little bit concerned about that AD line, which keeps going lower and lower. That always makes me a little nervous. And I'm just not yet a fan of airlines. I think we're in a situation where rising tide is lifting all boats, including this airline boat. But I'm not sure longer term. I don't believe we're going to see relative strength in this area for a while. Still too many question marks in this group for me. So I'll pass, but do want to mention the last few days we've seen some really nice action here to kick off February, and airlines making the breakout. 10-year Treasury yield. No economic reports due out on Tuesday, and there were none on Monday of any significance. But we did move up, and it looks like maybe we've put in a short-term top. We did get right up to this resistance area. You can see we also had gone down just recently and tested not only the yield support there at 1%, but also a psychological level at 1%. We tested that, bounced off of it, went all the way back up, and challenged that January high on the yield at about 1.18%. As I mentioned, we did move up to 1.19% and change on Monday before reversing back down, finishing at 116. So short term, I'm not quite so sure where we're heading. I still believe that somewhere over probably the next few weeks to a month, we're probably going to test this March high. And that level came in a little bit above 125, maybe 1.27%. So if we do pull back and consolidate for a while, I still expect we're going to get that breakout and move up to challenge that March high. All right, let's move on to talking technically. First, just wanted to point out the S&P 500. I know there was a lot of nervousness in the market a little over a week ago when we finished down. There was a lot of speculation maybe that what was going on with Reddit, the Wall Street bets, a lot of the short squeeze stocks being taken up, with many hedge funds having to liquidate some things, big losses, and there was some concern there about fallout. Only thing I can say is that the Reddit traders, while collectively they certainly made a dent in the market, they're still very, very small relative to the size of the U.S. stock market. I was not going to go down that road and believe that the Reddit traders and these couple of hedge funds that had struggles were going to take the market down. Again, I think that was headlines. It was great headlines for the media, but really didn't mean that much, in my opinion, to the overall market. We've bounced right back off of that. Now we're back to new all-time highs again. Just get used to it, because I believe the market's going a lot higher. Earnings are coming in way ahead of expectations. Forecasts are being raised. GDP is going to be raised later this year, I believe. I think we'll see at least 5% GDP, maybe 6% or more. That's going to be the biggest GDP that we have had this century, and it's going to come with interest rates at historic lows or near historic lows. That type of growth with low interest rates will send valuations soaring. And you may think, well, they already have. Well, they have, but we're only up about 20% from where we were a year ago, before we had the pandemic. And I was very bullish then. Before the pandemic, I was bullish during the pandemic, and I'm still bullish. I believe we're going a lot higher. I wrote an article recently talking about the S&P 500 approaching 4,000, and that I believe at a minimum, by the end of this decade, we're going to be at 10,000 on the S&P 500. I wouldn't be surprised 15,000. And that represents about 13% a year to the upside, which I think is very doable. Maybe 14%, something like that. Over the last 70 years, the average is 9%. So it's not like I'm talking about we're going to be triple what we normally experience. But in the last secular bull market, in the 1980s and 1990s, we averaged over 15%. And in the 1950s and 1960s, during that secular bull market run, we averaged a little over 11%. So I think 13 to 14% would be kind of an average, and that will take us by the end of this decade well above 10,000. So, I'm not just, making the numbers up. I mean, these are numbers I think that are very achievable. At 13, I think I've got this in my notes here, but at 13.3%, which is about what we're averaging so far during the secular bull market, if we continue this pace by April of 2030, we'd be at 13,000. Now, if somehow we were to actually increase to the pace, the average that we saw in the 1980s and 1990s, that was 15.41%. If we got it up to that level, by the time April 2030 rolled around, we'd be over 18,000 on the S&P 500. So I know these numbers sound big, and they are big, but 13%. I mean, you have to keep in mind that for 13 years, from 2000 to 2013, the S&P 500 went nowhere for 13 years. So this is how secular bull markets and bear markets work. Secular bear markets, we do nothing for an extended period of time. You can't convince me that our economy hasn't grown over 13 years, yet the S&P 500 doesn't reflect it. So you've got catch up, and that's what creates these secular bull markets. I think we're going a lot higher. Anyhow, let's move on. I do want to point out let's pull up the small cap index versus the S&P 500. And let's change this from candlesticks to a line chart. And what we will see is that we broke out again today. So recently we had pulled back in the small caps heading into the early part of February relative to the S&P 500, just like we did at the end of December, just like we did end of November, middle of November, these pullbacks close to the 20-week moving average, the relative 20-week moving average, and then we bounce off of it to new highs. I think we're just doing it again. I love the small caps. One of the reasons why our model ETF portfolio that I talked about at the beginning down here, one of the reasons why our portfolio performance is so far ahead of the S&P 500 over 4 months is that we have focused on small caps. Not that we're completely in small caps, but we're just allocating a few of our funds towards small cap stocks because I believe they're going to outperform. And that's what we're doing again, moving back up to new highs. All right, let's move on to all-star stocks. So if you're not familiar with what we do at Earnings Beats, every 90 days, we select 10 equal weighted stocks to put into 4 different portfolios. All 10 stocks are in 10 different industry groups. All 10 stocks are leaders. And so a lot of my time throughout earnings season is identifying companies that could potentially be added to our portfolios. We replace all the old with the new. Some of them remain. We've had Tesla in our model portfolio now for 4 quarters because they've reported great results and they're one of the leading stocks, if not the leading stock in the market. So of course we want to own Tesla, but other stocks come and go, and so we're currently in this evaluation mode right now. So what I want to do is just go through, and this is just over the past few days. These are just companies that have reported in the past few days that I think are worth mentioning. And this is one of our current portfolio stocks, Align Technology. Just reported earnings, big gap up, as you can see, big volume, pulled back a little bit today on Monday, but overall, beautiful move to the upside. Look at the relative strength. This is what we look for. I mean, this would be a poster child for what we have in portfolios. Their group is going up. The stock is going up relative to its group. It's going up relative to the S&P 500, and the group, medical supplies, is going up relative to the S&P 500. This is what a leading stock in a leading industry group is going to look like. So Align Technologies, which has been a great performer in our portfolios up to now, may make it another turn. I don't know. I think it looks very interesting. A couple of others that look very interesting, and this one I've kind of kicked myself over the last few quarters because I've never included it in any of our portfolios, and yet I think that it's one that's certainly worthy. its latest earnings report, just another huge move on heavy volume to the upside. When you look at the volume here, you say, well, the volume, isn't a whole lot greater than what it's been in the past. But remember, the stock now is $90. When we had volume over here, the stock was $30. So if you've got similar volume and the stock's 3 times as high, the dollar volume's 3 times as high. Got to keep in mind, there's a lot of money rotating into Digital Turbine, APPS. Look at that AD line looking awesome. And you want to talk about relative strength. I mean, this thing has been off the charts. So APPS certainly is going to get a good look. DT, Dynatrace, also in software. Look at this breakout. Now, this one, when you look at relative strength, hadn't really been doing much. And then all of a sudden with earnings, we shoot to a 52-week high relative to software. Look at this gap up. Stock was down at 42 something. Now it's 56 in just 3 or 4 days. Big volume coming in. I think Dynatrace looks really interesting. How about eBay? eBay with the big breakout, pulled back one day and then started right back up to the upside. But this sideways consolidation, I really like this long basing period. Now, what that means is that you lose a lot of relative strength because the market's going up. If you've been consolidating while the market's going up, you're going to lose relative strength, and that's what this shows us. But heading into its earnings, it actually put in a double bottom relative to its peers, and now it is currently at about a 4.5 month relative high. It's broken out of the base, good volume. I think eBay is looking ahead at some pretty good action as we move forward. A couple of other stocks that are already in our portfolio, Pinterest. This one I think has been in maybe 2 quarters. But you can see the last couple earnings reports, big gap ups. And I know some folks don't like to chase, after stock's been up. I find that leaders lead. And yeah, they've been outperforming, and yeah, they probably overbought, but for good reason. Wall Street's accumulating. And so we just got another earnings report on Pinterest, and we are pulling back a little bit. I think in the short term, any kind of a pullback, especially down to the moving averages, likely be a pretty good opportunity for entry. But I like Pinterest. Snap came out with their earnings report, gapped down initially, and then came roaring back. Look at that volume. Very solid hollow candle right there on heavy volume. And that sent the AD line up to a new high. Relative strength, it's one of the leaders in the internet area. And of course, internet moving back up, just setting a new 52-week high versus the S&P. So you got a solid industry group, and Snap is one of the leaders. Really good action here. There's a chance Snap may continue to be in our portfolios. How about Teradata Corp, TDC? Now, all of a sudden, the stock was doing okay, kind of had broken out, and look at the last 2 days on Teradata. I mean, this thing is just exploding. Now, its group has not been very good relative to the S&P, and this stock hadn't been that great until all of a sudden, a huge move here with its earnings out late last week. And let me do one more here. How about EL? This is Estee Lauder. After a little bit of sideways action, look at that breakout. Look at the volume coming in. Now, the group itself is not very good, but Estee Lauder is easily one of the top performers in the industry. And even though it's in a bad industry, it still broke out relative to the S&P 500. So this one's showing a lot of strength. These are just some of the companies that have reported just recently. Another one would be Tapestry TPR. This is a company that's currently in one of our portfolios, breaking out to new highs again with its earnings report, that AD line moving to a new high. Look at the relative strength right here versus clothing and accessories, and then versus the S&P 500. Clothing and accessories, it's pulled back a little bit the last few weeks, but it was just recently at a 52-week high. So this pullback, relative pullback, could be creating some opportunities, but TPR has easily been one of the best stocks in this space, and it continues to move higher. I really like TPR. There are going to be some tough choices to make. And there's even a stock, I'll give you one more, Quinn Street. This is a media agency company. And wait until I show you the media agency relative strength. But here's a company, doesn't normally trade as many shares. That might keep me out of the stock, just the sheer fact that the volume sometimes isn't that heavy. But gapped up, already been in an uptrend, AD line on the move to the upside. The stock relative to its peers is just kind of okay. which isn't bad when you look at how its peers have been going. I mean, the peers have been going off the charts here to the upside. Media agency has been one of the hottest areas in the market. And you can see here, this is the absolute chart. Back in October, it was at 500. Now it's at 834. It's up over 60% in the last 4 months, this group. So yeah, the stock maybe isn't outperforming its peers, but my gosh, the peers are up 60-some%. So it's kind of hard to outperform that in 4 months. But QNST has been a great performer and another one that deserves consideration. So you can see there are a lot of different stocks to consider. Now, I take a top-down approach. And so one of the things I like to do is look at relative strength. So let's talk a little bit about relative strength, the next segment. When I go through and look at relative strength, I pull up industry groups. And what I want to focus on, I could show you semiconductors, which have been absolutely outstanding. This is the charts I show you are going to be the industry group relative to the S&P 500. So this is a 3-year chart. And you can see over the last year and 8 months, semiconductors are just crushing the S&P 500. We have been heavy in semiconductors in our portfolios. We will continue to be very heavy and well represented by this group because they continue to outperform the S&P. You want to be in areas like this. But this is a group that's been doing it for a long time. I wanted to point out a few that maybe haven't been, moving up quite as long, and certainly maybe not as fast until recently. Let's look at travel and tourism. Look at the group. It had been in a downtrend for a couple years, but with the vaccine news coming out in early November, now we got a group that's on the rise. And this is a group that tends to do pretty well this time of year, by the way. So I think this is a group that we might be looking for some representation. Then you get into another area like auto parts. Look at the auto parts group. So just in October, went through both its 20 and 50 week relative moving averages, and it's been staying. I mean, I showed you that semiconductor chart where we broke above and just kept trading up higher and higher. Well, here you've got auto parts basically doing that, not for as long a period of time, but they're clearly in favor right now. So auto parts looking good. I mentioned the media agencies. Let me show you what that chart looks like. I mean, look at the relative strength. As recently as August, we were trading at a multi-year low relative to the S&P. And literally in the last 5 or 6 months, we have just caught fire in this area. So this is a group to certainly look for. A couple of industrial areas that I wanted to point out that I actually liked last quarter, and they've continued to do well. First one is heavy construction. So back in November, when we were picking stocks for our portfolios, you can see where heavy construction was strengthening, and look at where it is now. It's still strengthening, still moving up. So this is an area I think that looks really good. How about commercial vehicles and trucks? Another area in November was looking really good, and it has just continued to strengthen. So these are areas within the industrials that we need to be aware of. Let me give you one more, and I'm going to move to the financials. This is a group that started to show a little bit more strength recently, investment services. And you can see with the vaccine, investment services took off. Back at the beginning of November, we have had a huge run up in just 2 months on a relative basis. We've seen a little bit of a pullback now, but I suspect we're probably heading higher again on investment services. So, and again, these are relative charts that I'm showing you. So when we're going up, it doesn't mean that we're just going up. It means we're going up faster than the S&P 500. Those are areas that we want to concentrate on. All right, let's move on to earnings spotlight. After the bell today, there were a number of companies that reported. I want to go over a couple of them. VRNS. This is Varonis Systems. And the stock had already been doing very well, moving up. AD line was getting close to a 52-week high. You can see the relative strength. So Wall Street was betting on a pretty good report here, and we got it. Varonis came out with earnings of 34 cents after the bell. The market was expecting 12 cents, almost tripled it. Varonis in after hours up more than 8%. So it looks like we're going to have a very, very strong open tomorrow. This stock is another one that could be considered for one of the portfolios based on these blowout numbers. But we'll kind of wait and evaluate, see how the stock trades after it opens tomorrow. But it does look like it'll be a pretty solid open. One company that reported after the bell, and I actually thought the results were better than the reaction, LiveRamp Holdings. This is in that media agencies group that I was talking about that's been so strong. LiveRamp has been doing pretty well, and I expected we were going to get good numbers, and we did. They were expected to post 6 cents in earnings. They came in with 14 cents. So really solid report there. But after hours, the action was negative on RAMP. Stock was down almost 6% after hours. So we could go back and challenge this 50-day moving average. But don't be surprised. You know, maybe if we go down open 75, maybe there's a head fake to the downside. But if we come back up through that open, there's a good chance that ramp rallies from there. So this will be an interesting stock tomorrow, how it trades. I think it could be very volatile, but could present some opportunities. Let's see. How about, well, I can tell you CDK. This one was a shocker to me. This will be the last one, then we'll get into the 3 you must see. But CDK, look at the chart. Excuse me. Just grab some water quick. All right, so this one surprised me. So CDK, look at the AD line. Looks like it's being accumulated. Look at the price action breaking out. Look at the relative strength. We were at a multi-month, maybe 9-10-month relative high versus business support services versus the S&P 500. Pretty similar, about maybe close to a 6-7 month high. The group has not been that strong though, but this stock looked pretty good going into its earnings. They missed, and there haven't been many companies that have missed, but CDK came up short, 59 cents versus 64 cents, and Wall Street was not happy. Stock is down more than 5% in after hours. I would have expected to be down even more than that. I would not trust, you know, where ramp I might be looking at as a possible buy on a gap down. Stock like this, I'd be very careful with because when you disappoint Wall Street, sometimes the pain can grow. So we'll see how it opens, but I'd be really concerned if this stock were to break back down below those moving averages. All right, the 3 you must see. First, I'm going to bring up a stock that was in an area that I talked about, heavy construction. This is Great Lakes Dredge and Dock Corp. AD line starting to move up. Look at the breakout on Monday. We had gone up in this little flag after had a flagpole that we made the breakout. Look at the volume expanding, solid relative strength building. This is one I think that could still run. Like I said, it's in a good area. Next up, in the toys area, didn't talk about toys, but toys is strong. Zynga. Zynga put in a nice little cup. If it does pull back, gap support, maybe even that rising 20-day moving average could come into play. Toys have been strong. The stock now moving up to about a 3-month relative high. So it's beginning to show some strength. I like the volume coming in on this move to the upside. This one looks pretty good. Last one I'll say is PRTS in auto parts. I talked about auto parts. This one's breaking out. It's also on our short squeeze chart list. So breaking out with heavy volume, we may get a short squeeze, which could add to the strength here. I want to thank everybody for tuning in. Everybody have a great day today. I'll be back Wednesday morning at earningsbeats.com for your next Trading Places Live. Happy trading, everybody.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.